Welcome. Let's take a few seconds to look at the data publication report. Right now we are looking at Friday's report of data that we have. You see this 2:30 p.m. report is about 8:30 in US non-farm employment change. And as I was saying in intermediate publication data, instruction, I was telling that most of the time the data will be not significantly different, like in this place here it's almost the same, and in this place upper here at this spot with Great Britain pound, which was not much different indeed. And there are also times when we have a significant important move after the data was very different than forecasted. You see, before we had over 50,000 employment change, and it was expected 100,000 as market has weakened as the markets are going down recently. The sentiment was really negative, not counting couple of last days, and we have actual data coming out about twice better than we thought, than some traders, some economists thought at least. So let's take a look at the chart. What happened? I'm telling you, most of the time those data will not impact the market unless they are very significant different than expected. And this is the case of different expectation, and it came better for the market. So let's take a look. Here we got 230. Oh, here it is. This candle right here, we got 230, so it's 8:30 in US and New York. So the market was not really moving. It was before stock opening, stock exchange, so there was not too much movement in the market. And we've spent an hour here after publication of those important economic data. So as you can see, there is much you can expect from those data, but you never know when they will rise up the market, or when the market will actually fall down. Here in this situation, it was pretty obvious. If there will be a significant important move, it will be in this direction. First of all, because it's the trend right here, it's growing very aggressively. Secondly, these data are positive, having positive correlation with the market. So if we got better situation with those data, the market should go up, as situation is generally better. So what I'm trying to say is this data is moving market up, but it's not always like this. When we have big regression, when there is some bigger corrective wave, when we have bears coming to the market for a lot of days, the situation might be different. The market can really move back and move into the downside, break some points, support resistance. So it is not never sure. That's what I'm saying. You look at the market, not at the data and forecast and the difference. Unless it's very significant, then you wait for a market to move to show you the direction. In this place, I'm telling you, the market was moving the same at this level for an hour, so it took him an hour to open. Here we got 3.25, so we got 9:30 at this point. So you see, at the market opening, we see this aggressive move which lasted for 85 points. So the market is right now kind of correcting for a few moments at 15-minute chart, but it can really go significantly higher in next hours. As you see, euro looks almost the same, only not so dramatic move we see here. But wait for it. Maybe it might be changing in the higher direction. So what I'm saying as conclusion is the market, this kind of data, this kind of difference, that's what we are looking at. That's what we are looking for. So for example, this data, it would be significantly different if we had previous 50 free forecast expected 53 as well, and the market would go with 70 or 80. This would be very interesting. I would be very interested in looking at the Great Britain pound with dollar pair to see how it's going to move, what is going to happen. So conclusion is always look at the market, not at the forecast and actual data. The market is showing you which direction and how far it's going to move. So this is the more important, not the forecast, not the economist, not the thing you expect. Let's look just at the market. As you see, this triangle showed us that we moved upper here, and the market is keeping moving higher. We're gonna see how it's gonna react with this support resistance. It's a Friday, so the sentiment is very important, and it will be visible. As far as you can see at the 30-minute charts, the sentiment is really growing here, and it's not gonna stop probably on Friday when we have a continuation of this growing sentiment. You see here the sentiment is growing, and here we got continuation of this beautiful triangle, and we got another breakout with higher highs, continuing, hoping to move another 100 or more pips to finish this day at the upside, at least at currencies, hopefully markets as well, and that's pretty much it. So I hope you will be watching this, and please keep it in mind to make sure the publication data don't really take your targets away when you're thinking about taking some profits with connection to those data. Thank you very much for listening. I hope it was a useful example. I hope to show you more examples with publication data. Thank you very much.